Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, November 9th, 2021. I am beginning tonight's update on the weekly chart. And the first thing you're going to notice, or that I'm going to tell you, is that I have adjusted the labeling on the degree level one additional time. And I have been in the process of doing that over the last several days when it started to become more apparent in the market that they're not willing to give up the bullishness. They're not willing to turn, and there was no reason being presented that would really force the turn. That again has changed, but initially, it made me go back and start to look at what could possibly be different in the degree to which I was counting. And that I put to work earnestly within the final, the wave up that we've been counting as an intermediate B wave and an irregular B. And that has changed as well. Now, I want to preface this by saying, nobody or nothing is wrong. The count wasn't wrong. What I am not changing is the outcome, what I anticipate coming next, and that being a major, longer term, higher degree corrective fourth wave. That remains in place. And also, what I was having trouble with initially was that I have always anticipated that this particular correction will bring the NASDAQ back to the price territory of the previous fourth wave of one lesser degree, and that was always on the primary level. So that would suggest that we are, in essence, doing a cycle degree decline. Whether that is an ABC, cycle ABC for a super cycle wave 4, but it is a cycle level correction. I still believe it'll be a fourth degree, and that may end up being on a super cycle degree level, but that will contain 3 waves of cycle degree. And that should find support back here in the fourth wave of one lesser degree, and that's this one. So let's look at what I've changed. For the longest time, I actually have had trouble with the size of this first intermediate wave in comparison to where I thought this fifth wave was going. Initially, I had put this intermediate third wave's completion point here, and then this intermediate 4, and then this intermediate 5, which was that original high, and that high was 15,709. And from that level, I had been counting an intermediate degree ABC decline. And this, where the 4 is, was labeled intermediate wave A of a primary wave A. So that's changed. Now, again, what has not changed is the outcome. What I've now done, though, is I've moved the completion point for all of the 5 wave sequences up a whole wave, a whole degree. And that pushes the 5th wave, intermediate wave 5's completion point, is our most recent high at 16,448. Come on, get up there. It'll get up there eventually. 448.50. That is where I'm putting intermediate wave 5, and then in turn the primary wave 5, and in turn the cycle degree also completed up there as well. So what that also does, it but it did kind of force me to take a harder look at what this continues to be 3 waves up, But then I realized that the fifth wave ended in a slight failure because it only equaled the high of wave 3. So I was able to count it as a 1, 2, 3, 4, 5. And I did change it to minor wave 1. And then minor wave 2, minor wave 3, 4, and 5 to complete intermediate 5 and likely primary 5. I leave the others off because we still have a potential for the market to once again turn and run up and get itself up to our previous levels that we were looking for. They're all going to come in the same. In fact, let me just go back out to the weekly chart and get that first one back in there. And that's going to be wave 2 to the top of wave 2 to the bottom of wave 4. Too high. I'll fix that in a moment. Let me now take this down to daily. And yeah, that'll work. So let's just see if that changes. Not with any great intensity. So we still have 16,000, but it's 881. But I think that if I do some internals here, I will find that likely I have some additional room that'll take us up to that 15,550 level, 500 level, and then 575. So 15,000, 16,575 to up, then there's upper levels. That's still can be a possibility. Let me go back down to the hourly chart now, so we can start to look at the internals of what actually is taking place. So one of my main problems that I've been having is that the ability for the market to actually reverse, and what was going to create that scenario where the majority of people holding long positions or the buyers would suddenly turn and go, nope, we're sellers now, and have good reason to do so. And again, because as I said so many times, Elliott Wave does not factor in news or fundamentals or anything of that nature, because it is truly based on human behavioral reactions. And so it's emotional more than anything else. And that continues to be the driving force behind creating the waves. So what I continue to look for is that catalyst that's going to change the emotional behavior from, oh, we got to buy it, we got to have it, I don't want to miss the rally, to, oh, we've topped and we're going down, I need to take profit. So I started to look at what actually was being moved around today. And it again was Tesla. But we saw that stronger selling come into Tesla. Stocks down closed down about $140. And that was up off a low. It was a little bit beyond where we were. Now, what caused that? Well, we had gotten that off the cuff remark from Elon Musk to his Twitter sphere about, gee, should I sell 10% of my Tesla holdings? And the real reason what he was asking is like, should I take profit on my unrealized gains because of the rally you all have created? And the answer back from the market was yes, go ahead, sell. And so I believe he did, along with many others. So if we start to see that major shareholders within a lot of these top tech companies start to decide, how they've already told us they're going to pay for these infrastructure packages is by increasing taxes on the very wealthy. And that includes everyone at Apple, Amazon, Advanced Micro, PayPal, Google, Facebook, Microsoft, Netflix, NVIDIA, Tesla, you name it, pick them. They're all out there. They've got the buckets loaded. And now Elon Musk has basically come out and said, because he's so high up there in the billionaire cycle, that once Tesla crossed that boundary, I think when it crossed 1,200, it became a $1 trillion company. So what's a few billion dollars between billionaires? And that's, I think, what could be the catalyst to kind of tip the scales. Because the infrastructure package, I continue to believe, is bullish for America, is bullish for workers, it's bullish for the middle class, it's bullish for people that need to rebuild. So how they're going to do that is by helping to rebuild an infrastructure which has been, for the last 40 to 50 years, totally disregarded when it comes to appropriating money to fix our roads and our bridges and the dams and the electrical grid and the water supply and the railroad tracks and providing electrical charging stations across the country, increasing the bandwidth and putting in high-speed internet across the country. This is just welcome to the 21st century. We need to be prepared because that's the direction that's all going in. And the country's finally passed a bill that is going to allow, or the Congress is going to allow the funding to get all of that upgraded. That's an important bill, and it's a major bill, and it's one that we all need. Now, I'm 67, so who knows? You know, I'm not pushing to raise the family and build up my nest egg for my future. My future's here now. I'm retired, et cetera, et cetera. So, but there are a lot of people that are not there, and they still need to build, and they have to have a little bit of hope for their own children, et cetera, et cetera. So it's, you know, future generations are going to benefit from what the country will be putting together now in terms of this infrastructure package. But the bullish part of that might be delayed until we actually start to get those people to work. We actually get the bill and the money rolled out to where contractors can begin to schedule work and getting people to work. That may take, I don't know, 6 months, a year, or longer to really start to roll the whole thing out. What could happen in between there? Well, we could correct. We could correct before that bullishness really takes over by solid evidence of it occurring. And then improvement across the base. So we still can get this correction. And I now still anticipate and expect it. But on a near-term basis, on a very near-term basis, we cannot discount that we could turn from these levels. And what that would really tell us is that this fifth wave, and then in turn, the 2 5s that sit above it, it's not done. That we have one more. So within this fifth wave, it is subdividing and it's got one more leg up. So this basically completed 3 of the 5. So 3 of minor 5. This is 4 of minor 5. That's if it holds. If it starts to decline and it drops below, excuse me, if it drops below 16,063, it's going to give a lot more support to these being the completion points. And we are dropping in that initial stages of that much larger decline. Again, that decline ultimately, in my opinion, wherever this finishes, makes no difference. My longer term forecast would suggest that this decline, this correction, will take us back to the lows or the price territory of the March 2020 lows. Those first pandemic slide lower. That's where I believe we're headed back. So in essence, what we're correcting is this last primary fifth wave. So it's going to take a while to get down there. Our first level of stronger support is going to come at this fourth wave. So we're going to just be able to measure the whole thing out as we walk fourth waves all the way down. So first, we do have 15,000, let's call it 800. That should begin to provide some support to get at least maybe a decent bounce. So as this starts to unfold, maybe wave 3 takes us down there, because this could be 1, 2. So again, I'm going to bring this down to a 30-minute chart, and we're just going to take a look at what the internals look like here. So again, we could have 1, 2, 1, 2, and now we're dropping. Now, if this is the third, we're just kind of dropping into the third of the third. And for all I know, because again, just think about this. This rally has been so intense and it has gone up so high that it's going to drop in stages, and it's going to build up the momentum to drop in stages. That's why we see 1, 2, 1, 2. Is this a 1, 2, an additional 1, 2? And now we start to slide stronger. And now we just drop precipitously. On the 30-minute, we are below, and the bars are closing below the 200-day moving average, and the 200 moving average on the 30-minute chart. Moving back up to the hourly chart, that 200 MA sits at 16,063. Well, we dropped fairly easily 100, 120 on basis of cash. The future, I can't even remember, but was down over 100 at the bell. So another 100, boom, we're there. Another 200, we're past it. We're getting down towards that number, 5,800, 15,800. Now, ultimately, we have support at these lower levels. But again, we're going to just have price support. Our Fibonacci support, we're going to work and figure out as soon as we're getting confirmation that the highs are done. I can give you some initial, and again, I will go out to the 4-hour, and let's just see what I can put in. I can put in, as eventually I'm looking for 14,370. That's the intermediate 4. And maybe that's just wave A of it coming off. So the first 5 may bring us down to that low. But if I just run straight retracements, so now I'm just going to look at retracements of this low to the high. Now let's take it back down to that hourly chart. Let's take a peek. So what do we have? 382 is 15,650. Now let's keep moving down. We can just keep pushing. So here we have 618. So we can mark that. These are all support levels. 236, 955 minimum. And that's below the 50. Excuse me, below the 200. Then we have this 15,800. That's just price support. There's no moving averages there, but it may bounce off that level. Then we have stronger support at the 382 of this entire 5th wave, and that's at 15,650, then 555, 400, and then it starts to break quicker. So we'll have a pivot point at 14,972-ish. But if it breaks through it, the pivot is lower, and then it will pick up speed again and drop back down to this next support level, which is at that 14,350 level. So that's ultimate. That's where I think even just this first set of 5 could bring it all the way down there. We'll see. We'll see how it develops. Right now, I cannot rule out a turn in the run to new highs above 16,448. So 16,450 above there. We should have resistance at 16,500, 550, and then towards 16,600. It would have to be a major push. It would have to be Tesla turning around and everybody just screaming to just grab whatever they could grab. Again, I start to see some of the buyers a little urging or just with more caution. So I'm beginning to think that a lot of it's like buy puts, buy stock, sell calls, buy stock. So I'm seeing it more as a hedge versus just we're opening up new positions. Now, what worked against everything today was Amazon. Amazon had buyers and had buying strength all day long. and had pushed at one point above, was up over $100 on the day, while Tesla was down over $100 most of the day. So there was a strong dichotomy going. For all I know, Amazon, they're pushing a short squeeze in Amazon. Now, either somebody's going to walk in and say, well, I'm going to take advantage of this and I need to sell a bucket load of stock. I'm going to hit these bids. And if they stood there and bought it up, God bless them. But I think that there's more to come. And I think that it will spread to all of our major, larger tech companies. PayPal reported this morning, and they didn't like it. They didn't like the forward guidance that gave the reason as to why the earnings weren't what everyone expected they would be for this last quarter because of, that was Coinbase. I confuse myself sometimes. PayPal, the earnings were not up to snuff. They weren't up to expectations. And that market turned and just sank and was down $25 in the day. Coinbase reported today, and they went up and made a record high prior to the earnings release. And they came out and they were talking about that they didn't reach their goal. They didn't make the number because of a summer doldrums in cryptocurrency trading. And that may be the case, but they initially took the stock from the closing highs about 357 all the way down back to 303 or almost 300, I think it got down to. But it's made a nice recovery, and now it's kind of settling back down and continuing to sell a little bit. Now, what all of that could be starting to signal is we're getting this transfer in. If there's going to be a tax on unrealized gain, then they might as well just go ahead and take the gain. If they're going to, take it and put it somewhere else. And so I actually think we may see crypto really go through the roof because everyone's going to be looking to transfer money, transfer wealth, transfer assets. And where? Anybody's guess. But that's a very efficient way to do it is through blockchain technology. In any case, tomorrow, I believe that we will hopefully continue lower, finishing this initial sequence. If the market's intent is to go up, it can't really fiddle around and go too much lower before it needs to turn, start getting up, break above 280, break above 16,300, break above 16,400 and start to head for that high. And it should be able to do it without much pause. That's the type of wave it would have to be in to convince the market and me, not that I'm the market, but just to convince me that, okay, we've got one more leg up to do. Otherwise, I would be anticipating that prices will continue to move lower and we'll be able to leave these highs in place and then label them and then work on what we're doing to the downside. Sorry about that. So that's the picture for right now. Again, I want to emphasize what the changes have made does not suggest you're wrong, you're right, anybody's wrong, anybody's right. It is just a change in the degree labeling. It does not change the ultimate outcome or the direction that I have been expecting. It just relabels what has taken place and gives an additional little bit more room if there's still an additional high, but it actually sets up for a much stronger decline, if anything. That's where I'm going to leave it. The next update is Wednesday, the 10th.